Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Hello, good morning, everyone. Welcome to Wealth Coffee Chats. Good to see a few of you up and at it already. Got my new fancy cup here. My daughter bought me a coffee cup that's self-heating. Keeps my coffee warm. So that's good. While I'm having a conversation, a chat with you guys, my coffee stays warm. So there you go. Fantastic to have you on this morning. Welcome along. Good to see you. A couple of the early birds up and at it already. Morning, Kevin. Evening for you over there in Florida. Great to have you here. Do the intros while things are warming up on the old live stream. Jason Witten's my name, if you didn't already know. Most of you know that, though, but if you don't, if you're new, say hello. Give us a shout out in the chat. Be awesome to hear from you. Morning, Sonny. Awesome to have you here, mate. Grant, great to have you on today. Awesome to have you in the house. Brad's there too. And Luke is on as well. Fantastic to have you here, mate. Good to see you. Good to see you. Welcome to the Wealth Coffee Chat show, folks. We do this about 10 past 8 each day. Most of you know the drill. We talk about a few things and what's going on out in the world of property investing, creating wealth, keeping wealth, and all sorts of conversations, pontifications, and occasionally a rant or two. So that's what we do here, all in the name of understanding how to buy, keep, and create some wealth and some income and some freedom, financial freedom from your property portfolio in the future. That's what we try and get up to each morning. Just try and stay on track. We do some other stuff. If you don't already know, we've got some podcasts that go out weekly and fortnightly. Sam, a business partner, investing partner. We've been doing that for 20 plus years. He puts out a podcast every week, and called the Urban Property Investor. Tabitha, head of our coaching and advising team, she puts out an interview with you guys. If you ever want to be interviewed on the podcast and share some of the wisdom that you've learned in your property investing journey, that'd be awesome. Reach out to Tab. She drops those every fortnight, folks. So there you go. Rosie, good morning to you. Fantastic to have you here. Sonia, there you go. Is that a cool way to say good morning, Sonia? If it is, awesome. There you go. Anyway, team, great to have you on this morning. I thought we might talk about a few things this morning. Some of you have seen this before, so play along with me. If you're there, you want to get involved. Understand we talk about the 3 phases. Japanese, there you go. Awesome. Love it, Sonia. We talk about the 3 phases of investing all the time, right? The idea as property investors, there's a phase what we call acquisition. We need to buy some things, right? I love a bit of fun, Sonia. No, that's awesome. Keep the fun stuff going. Now, in the 3 phases over a 15 to 20 year period, when it comes to building a property portfolio, need a bit of time. Most of us understand that. If you're here and you think, all right, I want to get rich quick, let's buy a few properties. Well, buy and hold property investing is not a get-rich-quick scheme in any way, shape, or form. It's certainly a get-wealthy long-term process that most of us don't really understand the compounding nature of its value over the longer term. But certainly, 15 to 20 years is a good time frame, right? And yes, you can speed it up a little bit if you've got more income and you want to be a bit more active. But, play with me here today with the time frame. Now, acquisitions. This is where we need to buy some investments, get the number of properties under our belt that we might want, and then we might want a principal place of residence, some investment properties, and we might need to build some assets in our super. You might have some company and trust investing as well. Whatever it is, this is your asset acquisition. This is your building phase. You need to do that as fast as possible, folks, right? Now, and when I talk fast, listen, let me tell you, fast is, probably a 5 to 10 year period. That's what I say. Over a 5 to 10 year period, you should be able to, acquire, a significant amount of your assets that you're going to keep for the future. All right. And, then we got them in play, team. We got those assets in play. What do we want them to do? Well, listen, we want the value of those assets to rise. That's what we want. We want the income of those assets to rise as well. So, sometimes the income starts a bit lower and takes a little bit longer to get going. We want the debts of those assets. Often the debts are more than the income to begin with. That's pretty normal when it comes to growth real estate. You might balance that up with tax deductions and sometimes, different styles of renting the property out. But it generally looks like this. A little bit negative pre-tax, and then it becomes positive pre-tax over here. And, away we go. This is the thing that we're looking for. We're looking for the magic of the gap here, which is where we have a lot of wealth. We've got a lot of wealth in our assets in the form of income and equity and value. But the question becomes, how do you unlock this phase over here? And let's finish off the 3 phases. The middle phase is consolidation. And then the last phase we call lifestyle or legacy. All right, legacy, lifestyle, legacy. The question is, how do you unlock that efficiently into the future? And how do you plan and how do you understand what to do there? Now, in the consolidation phase, there's a few things we've got to do. We call it the manage, maintain, and maximize version. So manage, maintain, and maximize. Make sure you've got a good agent. Make sure you maintain those properties in good working order. And if you need to, and if you can, you maximize their highest and best use of value. All right. And this is where you want to do some, debt reduction while your rents trying to get your rents up, right? This is kind of bringing it into simple terms today, but here's the idea: get the properties purchased, manage, maintain, and maximize them well. Knock a bit of debt down, bad debt down. There's certain debt you should target as you go. And yep, that's right, Tim. In the retirement phase, it's the net income. It's the net income after your costs, right? Now, you don't have to be totally debt free to retire, right? Our process, our focus should be on the debt that is not income producing, okay? And that's usually your home or other debts, all right? Yep. Boom. Exactly, Grant. Yep. Actively pay down debt, specifically the debt that's not deductible. We call that bad debt. Specifically, and you can use offsets and redraw facilities
There's a strategy called debt recycling. Now, some people want to do debt reduction in a lump sum. Now, I'm not a fan of selling our properties because it takes quite a effort to get them. But sometimes maybe this one's gone up in value, significant enough. You sell it, you have a large amount of cash, and now your debt in this phase here, goes like this. Okay, and you chunk the debt down in the consolidation phase. There's a few ways to get this done, right? Which is all good, and you make sure you just understand the pros and cons of buying, selling, keeping, refinancing, etc., and get it done. And that's what your coaching and mentoring is all about. So that's the idea, right? That's the idea. But let's talk about today. Talk about the idea of this this phase here, the consolidation phase, and what it might look like. Because what myself and Andy and Sam have been doing is we've been working with some business owners on the idea of an exit plan for business. And along the way, part of that is acquiring and understanding how to load up, your world when it comes to assets, et cetera, et cetera. Now, the important thing to understand is that for many of us, when our property portfolio reaches a certain size, and let's face it, at pretty well from the start, you're investing. You should treat as a business, your own business for your future. But when your property portfolio reaches a certain size, between like $3 to $5 million worth of assets as an investment process for you and your family, well, you get access. You start to get access to some of the exit plan strategies that we've been putting together for some of our business owner clients. And whether you're what we would call a sophisticated investor, we would call you a 1% clubber, 3 properties or more, $3 million or more of assets in your portfolio. You might benefit from the exit plan strategies that we've got. So, but anyway, well, let's talk about that today. So the idea, what we've done is we've put together a little version of the world where we say, all right, well, what do we need? Some of you have seen this before when we've talked about needs, wants, dreams. We've refined this a little bit, and we'll talk about, what this might look like as you go. So, this is your needs, wants, dreams up here. What does it look like? Let's say I want $100,000 of passive income. That's my minimum. I've got $100,000 to get a bit more excited, and then I want some spare money, to do a little bit of stuff with, right? Call that $250,000. Where are we now? Well, I want to exit my, if it's 2024 right now, I'm going to give myself a 10-year period. And you go, right, 2034 numbers to exit. I've got 10 years. I've already been sort of along the road, sort of in the investing. I've been doing it for 4 or 5 years. I've got 10 years before I need to go. What do I need to get this thing to as we go along, right? And we have a look at a few of the strategies, a few of the ideas that we can deploy when it comes to these things, right? So really, at the end of the day, we've broken it down into 4 really simple things, right? Your principal place of residence. I don't know if you can see this, but this is your PPR. That's your home, right? What strategy have you got around your principal place of residence, right? What strategy have you got around your super? Now, you guys have heard this before. What strategy have you got around your property portfolio? And what investing strategy have you got around other investments? For many of us, we may, do a portion of our investing outside of the world of real estate, either in businesses, shares, and other assets, whatever that might be. So the total, what's our asset goal when it comes to this? We do the, and we can do that. We can do the divide by, right? So if you've got a calculation, I'll find my little calculator. Don't know where I put my phone actually. But if you say, all right, well, the end of the day, I want $250,000 worth of passive income. Not working this morning, my my calculator. Anyway, if you want $250,000 worth of passive income, what's the level of assets? I think it's about 7 mil, right? I think that's about right. At a 5% interest rate, right? Or a 5% return, your income return. So how do we turn our incomes? This is either your job or your business creating an income. How do we turn the job or business into those assets? Right down here, there's money coming in from your super, right? That is compulsory. You get it from your job. You get it from contributions if you want to. Then how do we turn that into your assets, right? And that's the plan we have. That's the goal, right? As we go, I'll use another color. So these come up into the asset section. These are two incomes we transform into our stuff. 5 mil. Thanks, Luke. 5 mil, not 7. Well, there you go. Not as much as we thought, right? So 5 million. So 5 million of assets creating a 5% return aggregated gives us our 250K, right? Now, this is kind of just rough math, team. So, it could be plus or minus. Maybe you're getting a 7% return. Maybe you're getting a 4% return. Maybe you have some debt. Maybe you don't have too much debt. You can still get an income on this sort of stuff. So we create a bit of a plan. The great thing in here, which business owners have some access to, is two things that they're up to that they can help accelerate their wealth. They can have the rent that they are already using to pay for someone else's assets go into their own wealth in the future. And often they can create some profits over and above their wages or their incomes that they're going to pay themselves. And they can, it's going to, got to get rid of a bit of a spammer in the chat. So they can use that to accelerate some of their wealth as well, right? As we go along. So what does it all mean? Really, at the end of the day, team, the idea is that we want to be able to, in the phase between consolidation, lifestyle legacy, transform your wealth that you create in whatever shape or form it is. Maybe it's in the form of, the business conversation, exit plan. It might be in the PAYG acquisition, consolidation, lifestyle process, whatever that might be. The acquisition of and accumulation of our assets, we need to transform them into places and spaces we can have an income created or a version of efficient income into the future. Now, that's a lifestyle that we might be keen on having, right? A tax-free income, right? A version of having a set of incomes created with some tax-free thresholds. You as an individual can own a certain amount of assets and you've got a tax-free. You can earn $22,000 and pay no tax on it. Fabulous. Now, the goal is to be efficient into the future. A certain amount of assets in your super generating some income could create $95,000 each. If you add that together, a couple gets 235 grand of tax-free income. I quite like the idea of that. Now, how do we transform our consolidated or our acquired assets into these phases? Because the thing is, often the places that are efficient for our lifestyle and legacy ownership and our lifestyle and legacy future are not where we purchased our properties to begin with, right? Another way here is if you have the ability to create income inside an investment vehicle, a company, and be able to distribute those profits in the future, All right, you can add another, no more tax to pay into the future. You can get a couple up to $500,000 worth of tax-free income into the future. That's pretty exciting, right? So the conversation is this: at a period of time, whatever that might be, how do you transform those assets? Let's say you own them in your own name, right? In your own name. So you as an individual might own some real estate. How do you transform them into, let's say, more efficient places for ownership in the future? All right. That's the conversation. Yeah. So, those are the questions that we want to make sure, as part of the lifestyle and legacy phase, we understand how to transform our wealth from one place to another in the most efficient manner, without letting the government, the ATO, and others who don't deserve more than they should. They don't deserve any of it, let's be frank, but let's not pay them any more than you need to when it comes to understanding how to transform your wealth from one place to another, because of the process of becoming more efficient, more tax effective, and more flexible for you as an individual or a couple into the future when it comes to that lifestyle legacy phase. Anyway, hopefully that made sense today. We're talking about the acquisition, the consolidation, and the transformation into lifestyle legacy. Needs a bit of planning, and I might do a few wealth coffee chats on that over the next little bit, to drop a few little grains of ideas as we roll along. All right, that's it from me this morning, team. Wealth coffee chat done and dusted. Join us again tomorrow. Yep, we'll do it again tomorrow. But the finance team will be up tomorrow. They'll do some finance wealth coffee chatting. So if you've got some finance things going on, tune in and listen up to the finance team tomorrow. But that's it from me, team. Good to see you. Thanks for joining me, and see you on Monday. Team will see you tomorrow. Bye for now. Cheers, everyone.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.